I want you to listen into the conversation because it was a very good set of numbers that the company reported. In fact, it's the best ever quarterly sales in Q3. Its collections have also looked very strong. Kamal Singal, who's the MD and CEO at Arvind SmartSpaces, joins us now. Mr. Singal, good morning and thanks a lot for joining in. So, if you go through your numbers, you had indicated that there could be a 25 to 30% year-on-year growth in pre-sales for FY23. Now, you did about 600 crores in FY22. So, given that run rate, we're looking at about 750, 800 crores in FY23. Is that what you will end with in terms of pre-sales? And then what is the kind of run rate that you're looking at in FY24, given how strong business has been for you?
Yeah, correct. Thank you very much for having me on the show. Good morning. Yeah, we said that, as you rightly mentioned, that we've been growing at a rate of around 25 to 30% for the last few quarters and years. If you look at the numbers in the last 9 months, we have kind of achieved the same kind of growth, around 25% in the fresh sales. And of course, we are hoping that similar trajectory will continue in the last quarter to come, and we should be looking at broadly the same kind of average that we have been talking about. Yeah, I mean, 750 to 800 is something that adds up to this 25% growth, and that's what we are hoping for.
All right. So 750 to 800 crores, Mr. Singal, for this year. But for FY24, how are things looking? I mean, what kind of a run rate are you looking at on that sort of a base? And also on pricing, both from a stock market perspective as well as from a consumer perspective or a client perspective, are you able to push through price increases even now?
We are in the middle of a major investment cycle at this point. As you are aware that we got into second platform is HDFC, which gave us quite a bit of firepower in terms of investments. 1/3 of that investment is already committed. Out of 900 crores that we had on with us under the platform, 300 is already committed, creating a top line of around 1,000 plus, etc. And of course, further investments will happen. So next year is looking very good in terms of fresh launches and fresh booking, etc. And the growth rate, which we have been talking and seeing the last few quarters and years, should continue, and we should even improve further.
So more than 1,000 crores? More than 1,000 crores for the coming year, for sure.
It's not our normal policy to give guidance on the specific numbers, but yeah, I mean, broadly speaking, the trajectory tells you about very similar numbers that you're talking about, for sure, yes.
Okay. On the business development front, you are targeting to launch about 1 to 2 projects per quarter, which will of course aid your pre-sales, but you've also added 7 acres to your Dobabalapur Road project in this quarter gone by. Just want to understand what is the major capex that you would plan in terms of both land addition as well as project. What would you need over the next 1 to 2 years, and how are you looking to fund that?
So if you look at the short term, which is say next 6 to 9 months period, we intend to invest anything between 700 crores to 1,000 crores in the new pipeline, out of which, of course, 600 crores will come from the platform itself. At this point in time, the company is debt-free. In fact, we have a debt-positive situation right now, minus 34 crores for the company as a whole. And hence, we have a very significant headroom to raise debt. I mean, even if you to remain within very conservative norms of below 1 debt equity, etc., we have a very significant headroom out there as well. So 700 to 1,000 crores is something that we are looking to invest in the next 2 to 3 quarters.
What would that mean in terms of a peak debt number, since you're debt-free and you're looking at investment of 7 to 1,000 crores, as you said, from the platform, you'll get close to around 600 crores, which is still unutilized. So peak debt levels that you're looking at, say, for the next couple of years, 24 and 25.
So historically, we've never crossed the debt levels beyond 1 debt equity. And it's more like 0.7 and 0.8 that we have been doing and raising in the past. If we were to keep those kind of conservative limits, and that's what the idea is, I think we should not be crossing more than 300 and thereabouts crores of debt in the next couple of years.
Okay, so you're comfortable that the debt, now you're debt-free, but you're comfortable that debt should not be more than 300 crores. Got it? Just a larger
Absolutely.
question, geographically, about 60% of your pre-sales comes from the Bengaluru region, and the rest, I understand, comes from Ahmedabad. Now we are seeing some slowdown in Bengaluru in terms of, the tech space, the startup space. There are large amount of layoffs, etc. So would you be looking to diversify to any other regions, Pune, MMR, I mean, I know you have a presence there, but would you be looking for geographic diversification over the next 1 to 2 years?
Yeah, sure. I mean, we have been doing fairly well in Bangalore and Ahmedabad. Bangalore, in fact, is our second home as a group, and in fact, more than half of our volumes are coming from Bangalore at this point in time. By the way, that market is still very, very strong. I mean, all this talk of tech going slow, et cetera, is all there. But I think the size that we are and the products that we are bringing, and there is a natural churn happening in the industry where more corporate and organized players are kind of gathering the bigger pie of the market per se. Even this churn is possibly a great fodder for players like us to keep growing in the market, even if there was a little bit of a slowdown happening here and there in specific sectors, as you just mentioned. So we are fairly comfortable and confident that Bangalore will keep growing healthy. In fact, last quarter, we launched one of the finest and most successful projects out there, which got sold in 10 hours. So it gives us hope and confidence and reasons to believe that Bangalore is not going to be slowing down very soon for us, and we'll rather grow very, very, very aggressively out there. Besides that, as you mentioned, Pune and MMR definitely is our focus. We have been talking about it for the last few quarters. We have put a lot of resources out there in BD, and that definitely is going to be our third market along with Bangalore and Ahmedabad in times to come in very near future. I mean, right now we are busy doing and exploring options out there, and I'm hoping that we should be able to click something very soon.
Okay. Kamal, thank you very much. Good speaking with you. Appreciate you joining in on CNBC-TV18 this morning. Thanks very much. Deepan, of course, is still with us. Deepan, I don't know if you track the company. If you do, I mean, welcome to comment. Another one which I'm not sure you